Hi, everybody. Welcome to Stop Being Sold, a community of informed consumers who are sick and tired of being sold financial products they don't understand or need. So if you're tired of being a transaction, go ahead and hit that notification bell and also the subscribe button so you don't miss another video from us. How are you today, Brian?
Doing great, Michelle. How's it going?
Fantastic. So I'm very curious to see what you have to say in today's video. We're going to be covering the Fed Chairman Powell spoke last Wednesday, December 15th. Made some announcements on inflation, QE, like the tapering of money printing, and then also what the Fed plans to do with raising interest rates next year.
So there was a lot last week, a lot that we had already anticipated, but a lot of the stuff we already knew. So like inflation, we see that every day.
You feel it.
Yeah, you feel it. And there were some of his language has definitely changed towards the perception of inflation being transitory to now being permanent. But there was hope in there too. So he did give some hope. So
let's talk a little bit about that hope.
Well, let's start with, first of all, last week we didn't have a rise in interest rates. And honestly, we don't expect that till the tapering has stopped. And that could be, they are speeding up the tapering process.
Yes.
So,
and they've been tapering the past few months, correct? So this isn't like they've just decided to do it. Now they're accelerating the tapering.
Yeah, they're going to accelerate the tapering. So, and the tapering, for those of you who don't know, that's the bond buying that they've been doing since the start of the pandemic. And so what's happening now, they're going to do $30 billion less starting next month than what they are this month. Well, last month when we heard him, he announced $30 billion less last month. So again, now they truly want to accelerate the stopping of the purchasing. And honestly, Michelle, we expect that by late March, that all the bond buying will stop. And we do not feel that they're going to rise interest rates before that. So there's a process that they're going to go through.
Sure. They'll first stop with the tapering and then move to raising interest rates. So I have a quick question. The bond market, it can be pretty confusing. There are numerous types of bonds, et cetera, but let's just boil it down. So if they stop buying these bonds, which they're doing to prop up Wall Street and the economy in general, correct?
Yeah, what they're doing is they're keeping the rates low by buying more.
Okay.
And it does in a low interest rate environment. That's why the tech stocks have ran as long as they've run. And now we're starting to see some of that pull back because we're slowly, we're accelerating the tapering bond buying to end. And
so what's the actual implication? This seems like something happening over here, and we all know, it trickles right the heck down, but what's the effect that we will feel as consumers?
We're feeling it today, Michelle. This is part of inflation because you've got so much money in the system. As they're buying these bonds and keeping these rates low, plus you throw on top of the trillions of dollars that have been spent since 2020, early 2020, since the pandemic started, there is so much money in the system that they have to start pulling it back. Inflation was caused by what happened here. Okay, all the excessive buying of the bonds and all the money we threw into the system, the printing of the money, they keep saying. But honestly, we have to pull that back because inflation's taken off. And the only way for inflation to drop, Michelle, is to raise rates. They're doing that now. They are actually truly effectively raising rates by slowing the bond purchase.
Bond buying.
But they don't want to do it too quick because we could collapse. We could lead to a recession by doing a fast interest rate rise. And let's say the Fed came out last week and said, okay, we're stopping all bond purchases immediately.
And we're going to raise interest rates. Yeah, it would
raise interest rates. Worst case scenario.
So we're going to stay, from what I'm hearing you say, from what we know and from what the chairman said, we're staying at those near zero rates where we've been since March 2020, at least through quarter one, or until they stop the tapering. They finish tapering.
until at least the tapering is completed.
Yeah.
And then also they'll relook at the economy at that time. But honestly, think about right now, there's a 50-50 chance of a March interest rate rise, the first one.
Okay.
And what they're saying is they're projecting, as of last week, they were projecting 3 rate hikes in 2022, 2 in 2023, and at least 2 more in 2024. But that all depends on how this continues. That was last Wednesday, and now we're in this week, and the market's still falling. Interest rates are still falling. The 10-year Treasury is still falling because they truly believe that the economy is starting to slow down. Well, if it's starting to slow down, we won't see all these interest rates come into play because we can truly hit the Fed's inflation target of 2%. I mean, we're way above that now, but the hope that I seen in the speech last week that the 2% could be back into play by the end of next year.
So when the Fed talks about that 2%, is that specifically the CPI, or is that also the wholesale prices, or is it everything combined?
It's just a combination of a
Like an average
2% inflation rate, which is good, which is normal, and that's what we want.
Right.
And because think about that, we've had that consistently for a long time now. Then all of a sudden, all that printing of money since 2020. And along with the pandemic and then the bond buying, and now we've got way above.
We have a problem.
Yeah, we got a problem. 6.8% inflation at the CPI index last month. And then wholesale prices, that came out since our last video we shot on the interest rates. It was 9.6%, a 39-year high at wholesale pricing levels. So
it's a lot. Yeah. And the CPI came out in December. That's with that 6.8%, and that was just specifically on food, right? Or was that the general thing? Because we looked at
general, yeah.
Gas and electricity were well into the 30s, 40s, and 50s for that in terms of increases. Used cars, 33, 34%, something like that.
It was
for cars, right?
Yeah, and honestly, though, Michelle, we're starting to see some of that start to pull back already.
Right.
And but again, they had to make this announcement to start the process of getting to that point to where we're pulling some money from the system, lowering the inflation as much as we can, and then they'll slowly go into. I honestly, I don't feel that they will hit 3 rate hikes for next year. That's me personally, because honestly, I think the way as fast as this Omicron variant is spreading, we was only 10 days ago, and I believe it was, and it was the first case in the United States. Well, now you got massive infections all across the country. I forget, like 38 states or something like that this morning. So
yeah. So what as an average consumer watching this, what are some tips that we can provide? I mean, what do you do with this information other than if you have credit cards, pay them off if you can, if they start raising rates like that. But what can we all do, or what can we prepare for?
Well, go back to the normal finance 101. Okay. Pay down the debt, pay down your debt, because would you rather pay down debt at today's near zero interest rates? Or would you rather wait for them to increase in the future and pay higher interest rates on your current debt that you have out there? Okay, that's one thing. Second, watch here in the spring, because if this drops further like it is right now, rates are still falling as of today. But if it drops down further, you may see a massive rush of refinancing before rates start moving higher. So that's one thing we expect to see. And so in the first quarter of next year, I expect mortgage refinance applications to go through the roof. So, and maybe even first-time home purchases, as long as the economy is still stable, which there's so much money in the system right now, Michelle, that the economy is still booming. No matter where I went around my area here over the weekend, every place is packed. So things are still, the economy, the pent up demand for services and goods is still there. that's what also is helping increase inflation
Right.
and making it
Sure.
hotter. So our what we're doing, our normal daily habits, especially since summers, as we're starting to come out of the pandemic, is forcing the Fed's hand here a lot quicker than I thought they wanted to. So.
Got it. Okay. So if you're watching this video, we did do a video a few weeks ago on inflation and your stock portfolio, and we'll drop that link below. And we also did another one on the real effect of inflation and your investments. I highly suggest you check them out. And like Brian, thank you for that. Just like, what can you do as just an average consumer? You hear all this and it's like, okay, well, now what?
Prepare.
I think you're right. Take it back. Don't spend more than you earn. Pay down the debt.
And our savings rates are at the highest in history. So it's a great time. Don't let off of that savings rate. Stay focused on what you did in the last 2 years of pushing money back for an emergency, because you never know what's going to come. If the Fed decides that they have to raise rates faster because the economy is still heating up, then you're going to see some major gyrations in the stock market too. But don't be afraid of rising interest rates, because time has shown us that in a rising interest rate environment, that's a good thing.
Right.
That means the economy's doing well and the Fed's trying to slow it down a little bit to keep it normal. So don't be afraid of that. So.
Okay, awesome. If you like this video, please hit that like button so others can find videos like ours and find our channel. And also it lets us know that you like videos like this. And don't forget to subscribe and also hit the notification bell so you do get notified every time a new video is posted from us. Thank you so much, everyone, for watching. And thanks, Brian, for explaining.
Everyone.